Chapter 11, Lesson 4, Methods of Valuation of Inventories. In this lesson, you are going to learn about how you are going to record the issue price of inventories and how we are going to prepare the stores ledger and how we are going to value your inventories. The main thing you need to remember is physically all inventories will be issued at first in first out method. The meaning is the inventory which you bought first you will be issuing first. But when it comes to record the price of the issued inventory, you will be having three methods and you will be preparing your stores ledger under three methods. So in this lesson, we are going to study how we are going to record the issue price and how we are going to prepare the stores ledger and value your closing stock. There are three methods in this lesson. Number 1, specific identification method. Number 2, first in first out method. Number 3, weighted average cost method. Now we will be learning about these three methods in detail. Specific identification method. According to this method, each item of inventory is identified with its cost. And under this method, each item of inventory will be having a special barcode or job code. Okay, so then this technique will be applied only for companies which is handling small number of items. You can understand the reason because you need to allocate job code or barcode for each and every inventory group. Now, in case of a manufacturing company having a large number of inventory items, you can't apply this specific identification method. Now we are going to learn how we are going to record inventory details under specific identification method. Look at this example 1. I have given you some stock details of Humaira Limited for the month of January 2020. I have given you receipts of inventory. You have received inventory to the store. You have purchased them. I have given you the date, quantity purchased, and the job number or the relevant barcode number and purchase price per unit. Then issues of January. Inventory issues. I have given you the date, quantity, and the job number. And the issue price has not been given. Therefore, you have to decide the issue price when you are preparing this stores ledger. Now we are going to prepare the stores ledger under specific identification method. Look at the format now. When it comes to a stores ledger, it has three main sections: purchases, issues, and the balance. Purchases. You buy your inventories and then you issue them for the production or for the purpose of selling. And the balance. Purchases will increase the balance and the issues will decrease the balance. Look at the format again. First column, date. And first of all, you can write down the month and the year. Here I have entered January 2020. And in this method, there is a job number allocated to each inventory. So the second column is for the job number. Now then, the main three parts of the stores ledger: purchases, issues, and the balance. Purchases, you have three columns: quantity, unit price, amount. Amount equals quantity multiplied by unit price. Then we are coming to issues. Quantity issued and the unit price you have to decide depending on the method. Amount equals quantity multiplied by unit price. But in balance part, you have quantity and amount only. Now, please take 3 minutes and draft this format. Example 1 under specific identification method. Now you are ready with your stores ledger. Check whether you have entered the month and the year under the date column. That's January 2020. Okay, first transaction. You have to go according to the order of the dates given. January 1st, receipts. So, under purchases part, all receipts under purchases part and all issues under issues part. Receipts of inventory 1st of January under date 1st. Quantity 400. Job number 202. So under job number enter 202. At 10 per unit. Unit price is 10. Now calculate the amount. 400 into 10, it's 4000. Now what you have to do is update the balance. What's the quantity you have now? It's 400. What's the amount? It's 4000 rupees. Then go to the next transaction. What's the next date? It's 4th of January. So under date 4th. 300 units for job number 203 at 11 per unit. So under quantity 300. Under job number it's 203. Unit price 11. Now calculate the amount. 300 multiplied by 11. 3300. Now update the balance. You had 400, then you purchased 300. So the quantity is 400 plus 300, it's 700. Amount you had, it was 4000 and you purchased 3300. Now update the balance. 4000 plus 3300, it's 7300. Please remember, purchases will increase the balance and issues will decrease the balance. Next date, January 10th. It's an issue. Issues of January. Okay. 200 units to job number 202. So under date you enter 10 and under issues quantity it's 200 and under job number 202. Okay, unit price and the amount has not been given. Okay, what you are going to do now? Go to the job number 202 purchases part. What's the available quantity you have under job number 202? You have 400. Now you are going to issue 200 units out of that 400. So if you want, you can write down in small letters minus 200 on the purchases transaction. What's the unit price of job number 202? It's 10. You can enter 10 under unit price. Now you can calculate the amount. 200 into 10, it's 2000. Now we are going to update the quantity. You had 700 and then you issued 200. Now the balance is 700 minus 200, 500. Amount you had 7,300 and then you issued 2,000. Now the available balance is 7,300 minus 2,000. It's 5,300. Here you have to pay your special attention on the job number. Okay. Then take 5 minutes and do the other 4 transactions. Next date, January 15th. It's an issue, 100 units to job number 203. Okay, under issues, quantity is 100 and the job number column you have to write 203. Now you have to go to job number 203 purchases. Yes, on 4th of January you have purchased 300 units to job number 203. Now you are going to issue 100 units out of that. So you can write there in small letters minus 100. Then tell me what's the unit price? It's 11. Then the amount, 100 multiplied by 11, it's 1100. Now what's the available quantity? 500 minus 100, it's 400. Rupee value, 5,300 minus 1,100, it's 4,200. Now go to the next date. That's January 16. Under receipts. Under dates, enter 16. It's 200 units for job number 204 at 12 per unit. Under quantity, 200. Under job number 204 and the unit price is 12. Now calculate the amount. 200 multiplied by 12. It's 2,400. Then update the balance. 400 plus 200, 600 quantity. 4,200 plus 2,400, 6,600 rupees. Then go to the next date. It's 17th of January. It's an issue. So under date 17, under issues quantity 200 and the job number is 202. Now go to job number 202 purchases. January 1st, you have purchased 400 units under job number 202. Now you can clearly see that you have issued 200 out of that inventory. Okay. Then in small letters, write there minus 200. What's the unit price? It's 10. Amount, 200 into 10, it's 2,000. Now update the balance. Quantity, 600 minus 200, it's 400. Amount, 6,600 minus 2,000, it's 4,600. Then the last date, 20th of January, it's an issue. Under date 20, under issues, quantity 200 and under job number, it's 204. Now go back to job number 204 purchases, January 16th. You have purchased 200 units. Now in small letters, write there minus 200. What's the unit price? It's 12. Then calculate the amount. 200 into 12, it's 2400. What's the quantity now? 400 minus 200, it's 200. Amount 4600 minus 2400, it's 2200. Now we have finished the stores ledger. We need to answer some other parts by looking at this stores ledger now. Closing stock. What's the quantity? It's 200 units. At the end of the stores ledger, you have 200. So that's 200 units and the rupee amount is 2200 rupees. Then we are going to calculate cost of sales. Okay, cost of sales is the total of the issue value. How many issues you have done? You have done 4 issues. Go to the first issue. What's the amount? That's 2000. Write 2000 plus second issue. What's the amount? 1100. Plus third issue amount is 2000. Plus the last issue, the amount is 2400. Now get the total of all 4 issues. 2000 plus 1100 plus 2000 plus 2400. The total is 7500. That's the cost of sales value under specific identification method. First in, first out method. Under this method, we assume that the inventory which we bought first will be issuing first. Therefore, the remaining inventory at a particular date will indicate the current market price. Now we are going to do an example. Now look at example 2. I have given you stock details of Zuha Limited for the month of January 2020. I have given you inventory purchases and inventory issues information. Now we are going to prepare the stores ledger. Therefore, you need to draft the format of the stores ledger. Please remember this point. Under specific identification method, you had a job number allocated to each inventory. But in the other 2 methods, you don't have job numbers. So the second column you allocated in the previous format, the job number column, you don't want under the other 2 methods. Okay, then take 3 minutes and draft the format. Now look at my format. The heading stores ledger under FIFO method. First column date. I don't have the job number column because I don't want that under FIFO method. Then the main 3 inventory records, purchases, issues and the balance. Same way, purchases, quantity, unit price and amount. Issues also quantity, unit price, amount and balance quantity and amount. And I have put the month and the year. Now we are going to start the question. January 1st purchases 200 units at 7 rupees each. Under date 1st, under quantity 200, unit price 7. Then the amount equals quantity 200 multiplied by unit price 7, that's 1400. Now you need to update the balance. The quantity we have is 200 units now and the amount is 1400. Then the next transaction. 4th of January sold 150 units. Under date 4, under issues quantity 150. Now we need to find out the unit price. Under first in first out method, you have to refer the oldest inventory you have. The oldest inventory is 1st of January purchased inventory. There you have 200 units remaining. Now from that you have to issue 150 units. So there, if you want, you can write down in small letters minus 150. Therefore, under issues you are writing unit price as 7. Now the amount 150 multiplied by 7, the amount is 1050. Now you need to update the balance. Quantity you had 200, then you issued 150. Now your balance is 50 units. 200 minus 150, it's 50. Amount you had 1400, then you issued 1050. Then the balance is 1400 minus 1050. It's 350. Next transaction. 8th of January purchases 900 units at 8 rupees each. Under date 8, under purchases quantity it's 900, unit price 8. Then the amount 900 multiplied by 8, it's 7200. Then you need to update the balance. You had 50 units and then you purchased 900 units. Now the quantity is 950 units. Amount you had 350 rupees. Then you purchased for 7200 rupees. Now the balance is 7550 rupees. Next transaction. 10th of January sold 900 units. So under date it's 10 and under quantity you are going to issue 900 units. Now go to your oldest inventory. That is the inventory which you have purchased on 1st January. What's the remaining quantity there? The remaining quantity is 200 minus 150, only 50 units. Therefore, first of all, you have to withdraw the remaining part of that inventory. Then if you want, you can write there in small letters minus 50. Then that 50 units you are going to write down under issues. Quantity 50, unit price 7. Then the amount will be 350. 50 multiplied by 7, it's 350. But you need to issue 900 units. You need 850 units more. Then go to the next purchase. That is 8th of January. You have purchased 900 units. So therefore, the balance 850 units you need to withdraw from that purchase. Then there you are going to write in small letters minus 850. Now under issues, quantity 850, unit price 8 rupees, amount 850 multiplied by 8, 6800. Now the total quantity you are going to issue on 10th January is 50 plus 850, it's 900 units. And the total amount you are going to issue is 350 plus 6800, 7150. Now you need to update the balance. Quantity you had 950 and then you issued 900. Now the quantity is 950 minus 900, it's 50 units. Amount you had 7550 and then you issued 7150. Now the balance amount is 7550 minus 7150, it's 400 rupees. Now go to the next transaction. 25th of January, purchases 300 units at 9 rupees each. Then under date 25, under purchases quantity 300, unit price 9, amount 300 multiplied by 9, 2700. Now update the balance. You had 50 units, then you purchased 300 units. Now the quantity is 350 units. Amount you had 400, then you purchased 2700. Now the amount is 400 plus 2700, it's 3100. Next transaction. 30th January, sold 300 units. Under date you are writing 30. Now you are going to issue 300 units. What's your oldest inventory? 1st of January you have issued 200 units. Now you can clearly say that you have totally issued 200 units. And 8th of January you have purchased 900 units. And out of that you have already issued 850 units. There the remaining quantity is 50 units. You can issue that 50 units now. So therefore you are writing under issue quantity 50, their unit price is 8. 50 multiplied by 8, it's 400. Now you found 50 units, but you need to issue 300 units. You need 250 units more. Then go to the next purchase. 25th of January. You have purchased 300 units. Now from that you can easily issue 250 units. Under issue quantity you are writing 250. There the unit price is 9. 250 multiplied by 9, it's 2250. Now you are ready to enter the issue quantity total. 50 plus 250, it's 300. Total amount of the issue 400 plus 250, it's 2650. Now you need to update the balance. Quantity you had 350, from that you have issued 300 units. Now the quantity remaining is 50 units. Amount you had 3100, from that you have issued 2650. Therefore the amount remaining is 450. Now we have finished the stores ledger under FIFO method. We need to calculate the closing stock and cost of sales now. Now the answer for example 2. You need to write closing stock 50 units. The final answer you have arrived at the balance column. And the rupee value is 450 rupees. Then you need to calculate the cost of sales. In this question, you can clearly see that you have issued 3 times. Take the first issue. You have issued on 4th of January. The value of the issue is 1050 plus the second issue you have done on 10th of January. Value of the issue is 7150 plus the last issue you have issued on 30th January. Value of the issue is 2650. Now get the total of all 3 issues. The total cost of sales value is 10,850. Weighted average cost method. This method is based on the assumption that once the materials are put into a common bin, they lose their identity. Okay, now all the inventories are inside the common bin. That's how we assume. So when you are going to issue inventories, we assume that we don't have any specific prices and inventories are not categorized according to dates or according to specific batches. So when you are going to record the issue price, we take the weighted average price. Now we are going to do the next example under the weighted average cost method. Example 3. Look at the example. I have given you details of Nishadi Limited for the month of January 2020. Okay, I have given you purchases and stock issues. Now you are required to prepare the stores ledger under weighted average cost method. Okay, now take 3 minutes and draft the format. Look at my format. The topic stores ledger under weighted average cost method, and you can use the same format for FIFO method and weighted average cost method. First column date. Now I have entered the month and the year, and the other columns are same as FIFO method. Now we are going to answer example 3. January 1st, purchases 200 units at 7 rupees each. Under date 1st. Under purchases quantity 200, unit price 7, amount 200 multiplied by 7, it's 1400. Now update the balance. Quantity 200, amount 1400. Then go to the next transaction. 4th of January sold 150 units. Then under date 4, under issue quantity 150. Now the method is weighted average cost method. When you are going to issue inventories, therefore, you need to calculate the weighted average price of the issued inventory. First of all, go to the balance before the issue. Immediate balance before the issue. Now here, this issue has been done on 4th of January. The immediate balance you can find Under 1st January, refer the balance column, quantity 200, amount 1400. Now you need to calculate the weighted average price per unit. Amount divided by quantity. 1400 divided by 200. The answer is 7 rupees. Amount equals 150 multiplied by 7. It's 1050. Now update the balance. Quantity you had 200, then you issued 150. Quantity remaining is 200 minus 150, it's 50. Balance amount you had 1400, then you issued 1050. Now the balance amount is 1400 minus 1050, it's 350. Please remember the special calculation here, the weighted average issue price. You have to refer the immediate balance before the issue and then calculate the average price. Then go to the next transaction. 8th of January, purchases 900 units at 8 rupees each. Under date 8, under purchases quantity 900, unit price 8, amount 900 multiplied by 8, it's 7200. Now update the balance. 50 plus 900, it's 950. Amount 350 plus 7200, it's 7550. Now go to the next transaction. 10th of January, sold 800 units. Under date 10, under issue quantity 800. Now under weighted average cost method, you have to refer the immediate balance before the issue. Now go to the immediate balance before the issue. That's 950 units and 7550 rupees. Then write under unit price 7550 divided by 950. You get the answer as 7.94736 like that. Then round it off to nearest two decimals. Then you get 7.95. That's the unit price. Then calculate the amount. Quantity 800 multiplied by unit price 7.95. The answer is 6360. Now update the balance. You had 950, you issued 800. Now the balance remaining 950 minus 800, 150. Balance amount. You had 7550, then you issued 6360. Then the balance amount is 7550 minus 6360. The balance amount is 1190. Now go to the next transaction. 25th of January, purchases 300 units at 9 rupees each. Under date 25, purchases quantity 300, unit price 9. Then the amount is 300 multiplied by 9, 2700 rupees. Now update the balance. 150 plus 300, 450 quantity. Amount 1190 plus 2700, it's 3890. Now go to the next transaction. 30th of January, sold 300 units. Under date 30, issue quantity 300. Now you are going to calculate the weighted average issue price. Go to the immediate balance before the issue. The last balance before the issue was quantity 450 and amount 3890. Now go to your issues unit price column. 3890 divided by 450. You get the answer as 8.6 and recurring 4. So you can round it off to the nearest two decimal points. It's 8.64. Calculate the amount now. Quantity 300 multiplied by the unit price 8.64. Amount is 2592. Now update the balance. You had 450 units. Then you issued 300 units. Now the balance remaining is 450 minus 300, 150 units. Balance amount. You had 3890. Out of that you issued 2592. Now the balance amount is 3890 minus 2592. It's 1298. Now you need to write down the closing stock and cost of sales. Now look at my answer. Closing stock. Go to the end balance of the balance quantity and amount columns. Closing stock 150 units and the rupee value is 1298 rupees. Now you need to calculate the cost of sales. The first issue you have done on 4th of January. Amount of the issue is 1050. Second issue you have done on 10th of January. Amount is 6360. The last issue you have done on 30th January. Amount is 2592. Now you need to get the total of all three issues. You get the total cost of sales as 10,002 rupees.